social media. Popularly called Modupetin, I'm a forex trader from Nigeria. This channel is structured to help every trader out there that is still finding trading very difficult. For a while now, everyone has been hearing about PTMM, ICT, and other smart money concepts, and I've been struggling in blending synthetic indices. Worry no more. I am going to be walking you through how to apply them to synthetic indices, most especially the hot cake that I have, the boom and crash and volatility. This is my revolution to make trading synthetic indices simple and fun with PTMM, ICT, and other smart money concepts like backup. For everyone, absolutely for free. I don't need your money. I only ask you to share this video and subscribe to this channel. I'm here to help you and guide you. I will be uploading series of videos on smart money trading concepts. I will need people who are serious, because no matter how I make it look simple, if you don't take your time to backtest and mark up charts to really see how these things are formed, trading can't really be, and you can't be profitable in it. And simple, you cannot be profitable with it. What you will find in this series, imagine how this will change your trading skills. Imagine you knowing how to identify the highs and lows of the day, the week, the month, and the year. Which time to avoid trading, the best time to trade, how to read the market the next day. Having a 95% accuracy rate. What to expect in this series? This market maker series videos, I have structured it to be in 9 parts. The first part is going to be the introduction, which I will talk about the trading manipulation, which is this particular video. The part 2 is going to be the market maker cycle, the 95% trading secret to accuracy. Macro views on level, counting, daily, weekly, monthly, and blending all these macro views. The predictive formula of the market. The most powerful indicators, how to set it up and how to use it properly. The best market maker trading. In part 5, I'll be talking about the best market maker trading setups, while on part 6, I'll be talking about the top entry techniques to time the markets with accuracy, as in the entry techniques you can fall into or you can adopt that will give you little or no drawdowns at all in your trade setups. On part 7, I'll be talking about the best time to trade the market, which is the market timing. On part 8, I will be talking about the ultimate swing trading strategy for those who can't or who their work schedule does not support them trading every day. For those who have the ability of swinging a trade for 2, 3, 4 days or even weeks or months, sometimes months or years, depending on your personal physiology and the kind of work schedule you are in. On part 9, I'll be talking about the 100% forex trading winners mindset. Introduction part to this part 1 now. The trading forex is a zero-sum game in which the weaker retail traders are positioned against the mighty bank traders and institutional professionals. You wonder, just like when we say an individual of a country is trying to fight the government of this particular country, it really takes wisdom to actually win the case. Yes, sir. So the same thing goes to the forex market, the foreign exchange, the financial markets. It's a zero-sum game whereby the retail traders are being placed against the mighty bank of larger financial institutions. I will explain how the market is being manipulated by the market makers in order to beat the retail traders. The good news is that for every manipulation they give, for every manipulation the market makers give, they give an equal distinguishable moves, they compensate you back in return with a pure move that will last for like 6 to 7, 8 hours. Ability to decode these behaviors correctly can put you on the right side of the trade with consistency and accuracy. You will be profitable. Many people still believe there is no market maker, or do they really exist? And if they exist, do they really work on synthetic indices? They believe the forex market is too big to be manipulated, which is actually wrong. Well, I'm here to tell you otherwise. There exists a small elite group of people. There exists a small elite group of people or group of traders that do in fact control how the market will play out on a daily basis, which are the market makers. The beauty of what I'm about to share with you in this series of videos boils down to this: the manipulation are visible on the chart once you trade your high street. As you can see the manipulation in every chart, irrespective of the time frame. You always find their footsteps in it. Once you train your eyes to see these behaviors and you understand what they mean, and it will give you the edge to trade like the market makers. Introduction to BTMM. This is where I will talk about the basics objective of the market makers, how it works. We are going to talk about the market maker cycles, how it works, what is involved, how best it can be identified and applied. So one of the major objectives of the market makers is to induce traders. This is achieved by using a range of price movement to trick traders into taking a positions in a given direction, but then reversing it again. This means that the market maker can sell a specific currency at a certain price and then buy it back at a lower price when the retail trader feels too much pain from the currency value, moving backward and wanting to sell it back again via the stop loss. What it is that if they want to buy, they have to sell first to the retail traders, and during the process of selling to the retail traders, they will have a first move, as in a momentum candle with large, as in they have a sell candles, large volumes or large momentum. And the normal retail trading concept is that once you see a candlestick, a huge volume, we believe the seller is actually taking over the market position, or if you see it in a downtrend, we believe the sellers are taking over the market. That is what on downtrend. And if we see it on the uptrend, we believe the buyers are taking over the market. That means we are in an uptrend. Another powerful tool they have is that they create panic and fear to induce traders to become emotional and think irrationally. How do they do this? Well, they do this with a quick move. Spike candles, news release, and inexplicable price behavior. Though in the synthetic indices, the news does not affect the market, does not affect the market maker, does not affect synthetic indices. Example, looking at these charts now. This is the example of a spike candle. By the time you look at this, we have these same candles coming from a downtrend. They gave us these momentum candles that we call the quick move. Look at this large volume of sell candles, and then by the time they come, they hit the stop loss here, and they reverse. They're giving us a spike candle. Then they give us a little bit consolidation, and they shooted the price up. Don't worry, I will show you a practical one on the chart so you see more better. Now this is 500. This is example of a quick move. Look at these three candles now. In ideal situation, as a retail trader, by the time we see this momentum candles, we believe we are just starting an uptrend, as in the buyers are taking over. So we're looking to take a buy position. Rather, it's just a way of market maker manipulating the market, just to induce retail traders to go in the wrong direction, and they reverse the price back and go in the opposite direction. Another objective they have, another way of punishing the retail trader, is hitting the stop. This is where most traders enter into margin problems and ultimately get out of the game. All these mentioned above can also be called the trade moves. These trade moves are mostly observed at the beginning and end of the week. That is on Sunday and on Saturday. The normal trading hour for synthetic is 24/7. That means we open on Sunday, and we open on Sunday by 12 a.m. GMT or whichever time. We open on Sunday I only want to go into the time now because due to the variation in time zones. But we always have it the beginning of the session, the beginning and the end of the week, which is usually the Sunday and Saturday. The beginning and the end of the day, the beginning and the end of the sessions. These are the areas where mostly we'll find this first move or trade moves here. And this is an example of what our first move. Look at this is Tuesday. We had a consolidation. We can just call it a consolidation day for us, and then they gave us this consolidation here, and it was the end of the day with this consolidation just to punish what. So look at this third candle now. You can see they are all momentum candles. After a series move of weights, they reverse the market with all this candlestick pattern that we all know. We'll talk about by the time we get to our entry techniques. They reduce and what give a first move, and during the exact session they clear the body into play and they move on. At the end of the day, they still gave the first move for the following day, looking at clearing the stop loss of these people here, and we'll have the move to go. This is an example of the beginning of the week. Like I said earlier, for synthetic indices, our week starts on Sunday and then on Saturday. At the beginning of this Sunday, this week now, they gave this momentum candle. Look at this momentum candle, thinking that okay, we are in an uptrend, right? But rather they reversed it and what gave a false move to begin another session. Right? This is another example of during the sessions. This blue area represents our Asian session, while this represents our New York session. This is the gap time between the London and the New York. Look at now, they created the high here, which is the resistance here. And after they finished during the London session, the first thing they do was to clear the board, hit the stop loss of the people here, and they reverse the market. They do not do that a lot. They do use the momentum candle. And look at this high candle here, just like we have discussed earlier. Looking at this day also here, we have look at what they did. After the Asian sessions, they gave the first move. Look at this momentum candle. This is very, very important. Very, very important. This is the only move they have. This is the only way they can manipulate, and this is where they have the ability to identify all these momentum moves, these first moves will really go a long way to help you. Manipulation. How do the market maker accumulate? Manipulation in the sense that the market maker only has three moves: the accumulation, the first move, which we call the stop out, and the long sustain run. The long sustain move, which is the original move they intended going. Usually this run will sustain for 6 to 8 hours, depending on the amount of contracts they have to meet up with. This is a practical example of it. This is Sunday. This is Sunday, right? So we have this accumulation here. This is our Asian session, and this is what our Asian session. And we'll finish the Asian session here. We have this first move. Look at this momentum candle here. Look at this momentum candle here. And they give us what? They consolidated to give us a big formation, a reversal pattern, which is our head and shoulder, or our ugly W, as we will call it. And they give us this what? And we'll write down. This is for an uptrend. Then we'll have it for what? For a downtrend. Look at this accumulation here. During our Asian sessions, they gave a first move. Look at this. Look at this momentum candles. It's always good. I told you this is all just a half. Inducing trader with their momentum candle, their hook move or their spike candle, and hitting the stop loss now. The ideology here now is that the physiology behind this thing is that this is the Asian sessions. We have stop loss above this area here. They come and induce it. Usually we have the stop points cycle we have. By the time we get there, it's always going to be 25 to 50 pips of the high or low Asian session. These are where we look at for our stop points. The only tools the market maker have are to be able to buy or sell currency in different volumes. These are just the tools they have. The ability for them to be able to buy or sell currency in different volumes at different price. By doing this strategically, they entice traders to take a position by providing evidence that the price is or is going to move in a certain direction. 2, they appeal to the emotion of the side of the traders by changing the character and speed of price changement. This is all these things we are still talking about. The first move, the momentum can. These are just the tools they have and they use as an edge over way trade traders. And this is these are the things you've not really able to understand, and that is why you have not really been able to be profitable as you think it is, because you did not understand the physiology of the market. The third tools they have is once the trap has been set and the bait taken by hitting the stops, they cause the fault. The bait taken in the sense that once they give that first, they hit the stop loss of people. They force them into margin problem. They reverse the direction in the opposite direction of where the stop hunt has been issued and go in that trend for like their intended move for like 6 to 8 hours, depending on the contract available for them. So by now you should know that the forex is a business. To be successful, you must be dedicated and committed. So now you have to subscribe to this channel so that you will not miss the most important part of this puzzle. Remember, this is just an introduction, and do not attempt to trade with any of these concepts explained here as it is crude. It has not been refined. Let's meet on our next second class of our series, but before we go there, let me go to the chart and show you a practical example of these things. So I will just have a raw chart, not like the one I've marked up earlier. So usually this is what we'll say. This is 500. Like I said. Now look at it here now. This is our Asian session. This was on Sunday. Look at this momentum candle. No retail trader will see this momentum candle. I will not believe that. Wow, the buyers are taking over. Look at this first one. Are taking over the market, and then what they did was that they just come and clear the ball within, and look at with these buy candles here. They do these things every time frame. You can see them on every time frame, regardless of the time frame. Whether the daily 4 hours time frame or the weekly time frames, as in the moves are much more available. Look at this is another spike candle. Look at what they do. Look at this momentum candle again, giving us a huge momentum candle, and they reverse it back and go the opposite direction. They hit the stop loss here. Look at, they hit the stop loss here. Okay, this is where they hit the stop loss there. Look at, there are stop loss there. They clear the board there, and they go opposite direction and come back again during our London, New York session, and they go opposite directions. So your ability to identify this move regarding of where time frame you are, they are applicable, will give you an edge over the market. This is on 15-minute time frame. The same things every year and there. Look at this was our Asian session. There are stop loss there. They hit what? Look at this momentum candle again. Always watch out for this momentum candle. But before you can start looking at these things, watching the momentum candle, you need to understand the level you are. You need to understand the cycles of the market maker, and that is what we'll be talking about on our next lesson, which is going to be the part 2 of this, where we'll be talking about the market maker cycles, 95% trading accuracy. But the moment you understand the market maker cycle, it gives you an accuracy because you know where you are in the cycle, you know what you are looking for, you know where to find it for. So this is why you just need to hit the subscribe button on our video, on our link, and make sure you subscribe and ensure you turn on your notification bell so that each time, by the next time I will be uploading the part 2 of this series, you'll be the first to watch it, and then you update yourself on it. Thank you.